Welcome to Auditel's first energy price bulletin for 2018. In this bulletin I'll be having a look at what's happened over the past couple of weeks through the Christmas break, but also look forward into 2018 to see if we can divine what might happen with prices then also. Prior to Christmas we saw the first signs of the volatility we'd been promised following the closure of the Rough gas storage facility here in the UK, which was our biggest storage facility, leaving us dependent on continental supplied gas across the interconnectors and LNG deliveries via tankers. The closure of a major North Sea gas pipeline, the Forties pipeline, temporarily, and an explosion in Belgium, in Baumgarten, caused a bit of panic on the market, and gas prices spiked significantly. They immediately rebounded the next day as those speculators cashed in on that price spike, only to rebound back up, perhaps not to the same levels as during the spike. But this demonstrates once again the UK's vulnerability to problems with the gas infrastructure, in particular when we don't have any storage here in the UK, or not significant amounts of storage. After that time, though, we entered the relatively peaceful Christmas period where there's relatively little trading going on, and prices have been fairly stable since that time, with the usual counteracting factors. We have seen oil prices continue to rise, however. Mild spells and a good renewable output have helped maintain a good balance on both the gas and electricity system, and we haven't seen much more volatility since that pre-Christmas spike. Looking forward in 2018, in the short term we've still got a couple of months of winter to get through, so that vulnerability, particularly to colder weather, is a key factor. If that's combined with any failures in the gas supply infrastructure, then we might expect prices to jump again. In particular, at the moment, the UK hasn't had any LNG deliveries for a while. This is because of high demand in the Far East due to colder weather. If that continues, then our reliance on continental imports across the interconnector remains a vulnerability, leaving us exposed once again if either our weather is cold or even if it's cold on the continent. Further out and further along the curve, one of the key factors over the end of last year has been the continuing rise of oil prices. If that continues, it's almost definitely going to filter through into our energy prices. However, there is growing speculation that it's unlikely to keep rising despite the promise of production caps, as oil producing nations decide to cash in on the increased revenues you'll get from the higher prices we're seeing now. That obviously has a counteracting effect on price, and we're already seeing that, and I've always seen that with shale oil production in the US. Another key factor to keep an eye on over the remainder of the year will of course be the currency rates, particularly that of the pound. Once again, speculation that the pound may have reached its nadir, in which case if the pound increases that will have a dampening effect on energy prices here in the UK, which is obviously a good thing for us. But of course it all depends on how those Brexit discussions continue. So all in all, as ever, it's impossible to predict exactly which way prices are going to go. We might expect some volatility if some of the key drivers align themselves. However, there's some degree of confidence that gas supplies remain healthy, that if the pound can rally and stay strong, then we might be at the peak of the curve. Bear in mind that we are around about a 3-year high in energy prices, and based on historic trends, then we should be thinking that energy prices haven't got that much further to go up. However, as always, anything can happen. If you've got any questions about this report or anything else that Auditel can offer, then please don't hesitate to contact me. Thank you.